I want to talk about some new stats that kind of paint a bleak picture. According to the University of Michigan, consumer sentiment dropped over 8% since last month and 32% year over year. This is one of the lowest points historically that consumer sentiment has ever been in since the 1950s. What does that indicate to you?
Yeah, so with that drop in the consumer sentiment, I really just think it's coming down to when it's called to the fear side of things and that uncertainty. So when we see that, we can kind of wrap it right back to that uncertainty of what's happening and uncertainty of what's going on, and then just the fear of that. And I do believe that as time goes on and there's more information that's given out and things become a little bit more clear, the landscape becomes a little bit more stable, that will change and that will shift. And so it really just boils down to a lot of people really not knowing what's going on or really not knowing what's going to be the next move. So as that becomes more and more clear, I do see those stats shifting and going back in the other direction.
Speaking of that fear side, I mean, a lot of people over the past month did not even want to look at their 401k. They were scared to do so. And whenever there is market volatility, you're going to see more dramatic swings in your 401k. What's your advice to someone who did log on, might have seen that number, and their heart might be in their stomach right now, seeing that their 401k isn't worth as much as it was before the tariff plan was announced?
Yeah, so one thing is just understanding that these are what's called paper losses. So when it comes to the market taking a dip and things changing, that is just the value at the time that you opened it. So at this point in time, you're likely not going to be taking money out of that 401k at this point in time. So it is only a loss on paper. So what I would tell someone in that space is just making sure that one, you're relying on your initial financial strategy and investment strategy that you initially set up when you opened up that account and you started putting money into that. Because when it comes to investments and structure, it's all about preparation. And when you're putting money into your 401k and you're putting money into your investments, most people's 401ks investment strategies are based upon their retirement time frames. There's a lot of target date funds, and that's in those spaces, and it's based upon when they're going to retire. So just knowing that this is part of the preparation that was done when you set up your 401k, and when the market does take those dips, you don't want to panic. It's a turbulent time, just like when you're on a plane. The pilot will tell you to put your seatbelt on and just kind of ride it out. The turbulence will go away. The worst thing you can do is take your seatbelt off and jump off the plane. So we really want to make sure that individuals realize that it is a turbulence. It is going to go up and down, but don't panic. Stay the course, and then allow the market to recover.